All right, so usually when I talk about metals in these podcasts, I'm looking at charts of gold because gold is the cyclical driver of the precious metals sector. But today I want to take a look at silver. And as many may know, especially if you're a subscriber, I tend to favor silver at this point in the bull market. Um, Maybe even over miners, although I would probably have a little bit of both, but I think I would lean more heavily towards silver. Um, Silver is starting to behave differently than it has for the last 20 years, really. Usually, silver will start to outperform late in the intermediate cycle. You can kind of see that here. You know, you get as you come out of the intermediate cycle low, silver kind of lags a little bit, and then towards the very end, as the intermediate cycle is getting mature, that's when everybody starts to um, perk up, take notice of silver, and that's when you get this big final push. Kind of the same thing happened back here, but that is changing. I think there are a couple reasons. I think going forward in the years ahead, of course, we're going to see more and more alternative energies, solar and wind, and silver is a big component of that. We're going to need a lot of silver. One big clue here, when gold made its, what I believe is going to turn out to be an intermediate cycle low back in November, silver did not break down to a lower low. That is a big character change in the silver market. Now, um, looking at this long-term chart, you can clearly see that during this move up to that top in August, that silver just got stretched way too far above its long-term 200-day moving average. And so, you know, one of two things had to happen. Either this had to turn into a parabolic um, move into a bubble top, which is just way too early for that at this point, or it needed to either correct really viciously, come back down to tag or drop below this moving average, or it needed to go sideways, give the moving average some time to catch up. And that's exactly what has happened here. And now we're starting to get some outperformance in silver, but it's occurring early in the intermediate cycle. So while gold did not break above this November peak during the recent rally, let me switch over to the gold chart here so I can show you that. So you can see here, here's the November rally, and this first daily cycle out of the intermediate cycle low did not break out above that high. But that's not the case in silver. Silver did. So you can see here, silver's made a higher high. So unlike many of the intermediate cycles that have come before in the previous 15, 20 years, now all of a sudden silver is leading the precious metal sector. So I think you want to be aware of that, and I think you want to be positioned um, heavier, put it that way, in silver than between the two, silver and gold. That one's a no-brainer in my opinion. I think you want to be in silver as opposed to gold. I think you're going to get 2 to 3 times the outperformance in silver that you will in gold. Um, I do think you want to have some miners. I think it's reasonable to expect the miners could at least come close to testing their all-time highs at this next intermediate top. But silver is there's clearly a big character change in the silver market, and we've spent the last 5, 6 months here going sideways, allowing this moving average some time to catch up to price. And we'll zoom in here a little bit. We've got, obviously, this just happens on every options expiration. There's always an attack on the precious metals market to drive prices down to cause as many call options in the metals sector to expire worthless as possible. So, this was not unexpected that we were going to get an attack on Friday, even though the jobs report came in light, but the attack had already began early in actually in the middle of the night. So the attack was already underway before the number even came out. And stops were already being triggered before the jobs report was broadcast early Friday morning. So, this is just something that happens on every options expiration. You can, just almost bet the farm on it. So I just tend to ignore what happens on options expiration. Um, if you get caught in one of these and you sell, it's almost always a mistake because this is just an artificial move and it's just driven by options expiration, and very often the very next day it just gets reversed, and that's what's um, starting anyway here this evening. Now, obviously, we still have to open in the morning. We have to make it through the day and see where we close. If this reversal holds into the close tomorrow, then the metals are set up to potentially complete their daily cycle low. All right, so now I'll move over to gold. You can see during the um, early part of Monday, obviously the markets aren't open in the US, but the futures markets are. Gold came down to test that major support zone at 1800 and it's bounced. Um, a big plus will be if it can erase all of this manipulated move from Friday and close back above the 200-day moving average. And if gold can complete a swing here, then I think there's a pretty good chance that gold is completing this daily cycle low here, and then we'll be set up to uh, make a higher high and break through this resistance zone right here at about, let's call it 1965-ish during this next daily cycle. So I'm going to come up with a couple of potential trading strategies for subscribers and put them in my morning report tomorrow morning before the market opens. If you want to get subscribed to the SMT newsletter, I'll put the link in the description below where you can go to subscribe to the nightly newsletters. And actually, I'll do one or two updates during the day every day. But for right now, we're deep in the timing band for a daily cycle low. We've got the potential set up for one to have occurred on Monday, and we'll take a look at that again in the morning after I see what the pre-market action is.